Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, October 14th, just after the close with Shaun Burgess, Portfolio Manager on our fixed income desk. Before we get started, Shaun, I just wanted to point out that John Musso and I did a quarterly review video. The link is below, and we cover some pertinent information coming out of Q3 into Q4. This week, Shaun,
it was a doozy.
It's similar to last week. If you looked at the Friday closing indice numbers on the equity side, you think, well, S&P down, 1.5%. Dow actually up on the week. Similar to last week, with the indexes, the indices up 1%, but inside of that, the volatility is extreme. Oh, yeah. And some of that's not seen in the volatility indicator that's popular, the VIX, right? It's been hanging around 30, 31. The extremes, though, in the movements in individual stocks, and I mentioned this earlier to you, and in sectors is off the chart. So we'll see sectors like machinery, industrials, energy, tech moving 2 and 3 and 3.5% a day. Very unusual.
It's amazing.
We'll see individual stocks, and I'm not talking about small, what we used to call penny stocks and so forth. We're talking about cash-rich, cash flow companies moving 3, 4, 5% a day in both directions. Very treacherous in terms of on our equity positioning. We're being judicious with the cash. Our US ETF portfolio is cash rich, 48, 49% cash. Didn't spend any of that this week. Our tactical portfolio is about 25% cash. Didn't spend any of that. In our core, US core portfolio, which really focuses on the broader indices versus sectors and industries, we did spend a little money. We bought an interesting ETF today called COWZ.
Yep, I saw that.
You saw that? CAWZ. And what it focuses on is 100 cash cow, thus the name, type of companies. And its two largest sectors are energy and healthcare. And with energy getting really beat up today, we just took a little starter position there. But in terms of what we're looking at, we're just trying to get some of this volatility to calm down before we get committed. We can nibble, but it's difficult to make a big commitment into this day-to-day volatility.
Having that cash is going to pay off when you do.
It will. It will. We have to be patient, and it's difficult to be patient, but it's similar to past nasty markets where that cash makes up performance awfully quick. So, and the volatility isn't just in equities. In fixed income, you're seeing it day to day.
It was a brutal week for equities, really brutal week for treasuries. Obviously, that inflation print we saw earlier this week, really took out those that thought the Fed was going to be turning around anytime soon. That inflation print, which came in above estimate in almost every regard, really shows that the Fed is going to have to put the gas down to try to get inflation to moderate a little bit. That's what you really want to see. And those prints didn't kind of show that. So treasuries on the week were higher in yield, lower in price. Munis on the other end, it was almost a tale of two markets. Munis were really flat to, in some places, even lower in yield to a small degree. So, you had a little bit of outperformance there, and it was kind of nice to see. Good relative performance to other things, equities and treasuries. So, it was nice to see Munis kind of hold their ground in here when you had a really brutal week pretty much everywhere else. So.
Yeah. I mean, commodities under pressure as well. We think of some alternative investments. It's really a shorter-term trading market. Cumberland, as a wealth manager, really is thinking more intermediate to longer term. Difficult to trade the equity markets day to day in that fashion. So we'll keep with our game plan. That's what we've been doing for 40 years, and we'll continue to. In terms of the calendar in municipal bonds. Anything interesting coming up? Any municipal issues you have your eye on the next
we got a
week or
little
two?
bit of a bigger calendar next week, nearly $8 billion or so. So we've seen some really nice opportunities, and we talk about those 4% tax-free yields. Well, this week we are seeing 5% tax-free yields, which we haven't seen in a really long time. And you really only saw when there was some dislocations in the market in the QE kind of thing. So we saw a couple of deals this week we participated in at that 5% level. So the calendar is going to be a little bit bigger. We'll see if we can pick up some more of those for clients, but you can easily be in the 4.5% to 5% range. And that's just extremely compelling. Even on a day like today, when you look at the 30-year Treasury at a 4%, to think you can get a 4.5% or 5% Muni is just extremely compelling in our view.
You know, you make a great point there. We talk about worst case scenarios an awful lot at Cumberland. Well, a worst case scenario in buying a 4.5 or a 4.75 Muni bond is that you have a 4.5 or a 4.75 Muni bond.
Yeah.
Even if rates go up and put some pressure on the price of that bond, you're still getting tremendous income on a tax-free basis there. So if that's worst case scenario, you know, I think we should have an appetite for these issues.
Yeah,
So.
we think it's just a compelling area of the curve right now. So we're extending durations a little bit, going out and picking those up for clients where we can.
All right, good, Shaun. Thank you.
Not a problem. Thanks, Matt.
Don't forget to like, comment, and subscribe to get all of our updates. Enjoy the weekend. We'll be back at it next week. We'll see if this volatility keeps up or if we can get a little dampening and get some reasonable entries. Have a great weekend.